ETF provide investors with an easy and affordable way to play different markets. No matter which way you think an index or commodity is headed, there's usually a product available. Take the S&P 500, for example. The blue line here shows the HXS ETF. It tracks the index and has seen a gain of about 5% this year. That orange line shows the HIU ETF. It inversely follows the index as closely as possible. Now, those two ETFs are also hedged against currency fluctuations into Canadian dollars, meaning it's as close as a pure play on the index as you can get. And David, you like these because it gives investors a way to either bet with the market or against the market in a fairly accessible fashion.
Right. So it's accessible. You might say, yeah, but I can do better by picking a sector or picking an individual security. And the thing is that we have sort of a record number of what are called all or none days in the S&P year after year, where every sector is moving in the same direction. So what you need to be able to call right is, from a macro sense, is the market going up or is the market going down? But you have to be able to change with the winds. You know, every time we see one of the pundits change their mind, we too might want to change our bet. And so by using an ETF, they're cheap. As you said, they're hedged to the Canadian dollar because that's a kind of risk that you do not necessarily want to take. Let's make a pure play. And they're entirely liquid. So I can decide 5 minutes later that I made the wrong call.
You can get in and out of this very easily.
And I can jump right in and right out at the same time.
The inverse one is basically a short on the market. You're betting the market's going to go down, and it is pretty well correlated to the market?
It's perfectly correlated in the opposite way, which is still a perfect correlation. And it would be impossible to replicate that on your own. And so at 115 basis points, 1.15%, that's a very cheap way to be able to make that bet without using your margin account.
Now, for an ETF, that's actually a fairly high expense ratio. We should note that's getting into sort of the low end of the mutual fund range.
That's right.
But because it's so complicated?
And also most of that expense is actually going to the hedging. It's not going to management fees.
Right, because there's some carry costs with these kinds of products. Well, it's been a rough week for Nokia today. Moody's